September is worrying me. As every September, we know that sometimes, if we look, for example, in 2014, volatility tend to rise in September.
Good morning, Bruno. So we're in September now. So do you think the US equity market will continue to go higher?
Well, good morning, Celeste. Yes, we do have good news. Let's see the small and mid cap, which is the breadth of the market. We see higher highs and higher lows here on the small cap and on the mid cap as well. And the relative strength has been rising during the whole summer, and it's now a little bit pausing, but the momentum is still higher. So at first sight, it looks good.
But what's worrying you?
Well, September is worrying me. As every September, we know that sometimes, if we look, for example, in 2014, volatility tend to rise in September. Sometimes it even starts a bit earlier in August, as August has been very quiet so far. There is some chance that the volatility would be rising. If we look at that here, we are below the 13% levels, which is a bit complacent. That means nobody worrying about anything. And on the other hand, if we look in detail at what happened in the last 10 days, we had a first initial rise from 11 to 15% and then a pullback. But this pullback with current rising momentum could be a higher lows, and that could announce some more trouble later on.
Okay, and what does that mean for the S&P 500?
Well, we hope that means that it will break out of these very narrowing Bollinger Bands, which has been lasting now for almost the whole of July and August. We see a very narrow trending range. Again, just before Labor Day, we had a kind of a false breakup on the downside. That's relatively corresponding to the seasonals, that just before Labor Day, it doesn't break down, it's more after it. And we had even a rebound toward the top of the trending range. So here, really what we need to think and watch is two levels, two simple levels. The first one would be a failure in the coming days to break above the resistance level, which is at 21.92.93. And of course, if there is such a failure, we would be watching the level of 21.60, the support, of course, as a confirmation that something is going on.
But there are other markets, such as the European equities markets, which have been doing quite well. It's been quite bullish, hasn't it?
Well, yes, and it did give a relatively nice bullish signals because it's breaking a long-term downtrend line that we see here over more than 1 year, around the level of 30.30, and now it's rising up. It comes at the same time as the relative strength versus the S&P is rising while it was declining so far. So in fact, basically, if it was declining so far, that means that Europe was lagging the S&P. So that could just be a kind of a catch-up situation and not lasting very long.
And how do you see the Japanese market performing?
Well, Japanese has been performing as expected, in the sense that when it came close to 100, then there was a worry that maybe it was too expensive yen, and then it corrected down to 96, and at the same time we see that Nikkei rebounded from 16,400 to the 17,000 levels. Now yesterday was kind of interesting because it made a new high, like a breakout above the previous resistance, 16,900, and at the same time, the yen rebounds, so it doesn't go together. One of both is wrong. So if there is a rebound because it was kind of a good move on the yen side, then probably the yen could be a bit toppish. And we see here the oscillators, the momentum is also overbought. So it's a situation where a reversal of this breakup could be a bit more dramatic.
But Bruno, are you being a bit too cautious? How are emerging markets going?
Well, that's a good question, because everything is doing well. If we take some more distance and we go to weekly charts, what do we see? We see indeed since June a very nice rise. But this rise now is approaching crucial levels. First of all, it's the previous highs of the area of September a year ago. Secondly, it is also technical levels close to this the top of this cloud, and we know there usually there could be some resistance or some stalling. That means the market could go from, instead of continuing higher, could go sideways and pull back. That's it for China, so that's why I'm worried.
And India was your favorite market. Is that still doing well?
India has been already making a small pause, like we mentioned that 2 weeks ago. And it's now making a new high, as if it wants to continue to go a lot more higher. It is true that it outperformed the S&P, that's the black line, which is rising. Versus emerging market here, it's not so clear because it's flat for now a few months. So that means that's not a leader anymore, it's just performing as well as other markets. So here again, we need to be careful about what would happen if we go back below this key resistance level that we have identified already 4 weeks ago. And that would come together with some bearish divergence, so that would mean what could come after is more of a stronger correction than what has happened so far.
And during the summer you liked Brazil, but has it been overbought now?
Brazil used to always, like when some Olympic Games happen, it's usually well doing. Any country, equity market of that country is doing well. And we see that it has been rising on a relative strength versus the S&P quite nicely. Versus the emerging market, it's now also stalling because it's also more linked, not anymore with Olympic Games, but more with oil. And here again, we are close to some key resistance that we had not seen since April of 2015. So with the momentum stalling a little bit, we need to be careful that it doesn't go back below 34.
And what could be a trigger for bad news?
The trigger for bad news would be basically in all these markets that what is expected about growth is not realized. So how do we measure growth indirectly in the markets? Usually when there is more growth expected, interest rates are supposed to rise. And that's why we try to identify already since mid-July, because we noticed these triangles in the interest rates of the 10-year US. But it hasn't broken up yet. It's taking its time. Again, it's stalled at 163, and it's back now to the support level of the triangle. So a much lower yield below 150 would be a kind of a warning. Because we noticed that when it went down in June, the S&P also had a kind of a sharp correction. And here it has been so quiet that it could happen the same thing.
And what should the second market be watching out for?
The second market is also linked to interest rate. We mentioned oil. If there is some expectation about inflation, that means oil price should also go up as well as the interest rates. And here we also have a very nice long-term pattern which calls for higher oil price. But there as well, it's taking its time. It's still below 51, and the relative strength versus the S&P is also still below its key resistances. So it's not yet a good contributor to a bullish S&P. So it's still in the waiting.
Well, Bruno, as always, such a pleasure to have you here, and we look forward to when you come in next time.
You're welcome.
That's all from myself and Bruno. If you like this segment, please give it a like and comment on our website, dukascopy.tv.